RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our, I guess, our Friday edition, TGIF. Guess whose birthday's tomorrow? You know, I didn't even realize this, but of course we have a triumvirate of May 11th now. But it turns out this is all Liz's fault. Jeez, Liz, troublemaker. Anyway, I had sent a message to our Sacramento slappers, one Sacramento slapper in particular, that he has a responsibility to keep an eye on Liz and Jimmy, and he reported that they are waiting for Liz's birthday because she always dumps the market, and sure enough, the market is dumping. So I don't know how bad gets here, but we're looking at some options information on the BITO yesterday. Actually, I did even a tweet out about the criminal behavior that happens in the options market on a basically a weekly, monthly, yearly, quarterly, decade basis. It never ends. It's always the same thing every single week and month. Anyway, so I do think a lot of this probably has to do with derivative expiration. It's not a big quarterly one. I suppose we got that to look forward to next week. So there's going to be an even bigger FU move. And usually the rule is if you want to learn something new today, 36 years now. Got my first job in this industry in 1988. Jesus. Time is marching on, eh? Anyway, usually most of the business is done on the Thursday. And then for these big monthly options expiry, third Friday of the month. And then the options expiry day itself is actually fairly quiet. So anyway, we'll see what happens. Today was an interesting day because, of course, we had a much anticipated. In fact, we went through sort of like almost really, I think you could argue the better part of this week with very little economic data to actually work off of. Yeah, great. Every time I change screens here, I've got so many tabs open. I'm really taxing my system hard here. I don't have any positions on, so actually I don't feel stressed. I made a bit of money day trading today, so actually feeling positive about prospects. But anyway, so the point here is we had finally a piece of econ that we can sort of sink our teeth in, and oh boy, this came out bad. So the market was looking for 78, which of course isn't really that high of a reading. I think the reading of the sort of magic reading that the economy is doing well on this indicator, I think, is 90. So a reading below 90, of course, implies not a happy consumer. And we're starting to get into like fall off the cliff numbers. Fact, I was actually pretty impressed. One of our day traders who's we're all going through our challenges. Keep in mind, it doesn't matter. And I got about 20 different things going on in my head, but let me just say this to my day trading buddy in the lounge here this morning. If you are going to watch this later on today or through the weekend, we all go through hot streaks. We all go through cold streaks. And really the most important thing is to understand that when you are in the hot streak, the money is ridiculous and can be. And if anything, you just got to put yourself in a position that when you are in a cold streak and, things are a bit challenging, right? You just got to dial back the risk. Just make sure not to blow yourself up and do any sort of revenge trading. I actually was a little frustrated this week. I had a real brain fart trade day on Wednesday. And I even did a couple of serious mistakes that 35 years into this damn game, you're still subject to making mistakes and revenge trading and all that kind of stuff. So Thankfully, I have the risk dialed down to an absolute minimum while still risking real money. Trading these micro contracts, so it wasn't bad. But if anything, I often suggest people that when you're going through a bit of a tough slog and you got to sort of, get the wheels back on the bus, the best thing to do is just dial risk down to the most minimal you can. So that's just my feedback for you, Mr. Day trader was in the room with me this morning, and hopefully I gave you a couple pointers that might help you as well. So anyway, back to our story. He had pointed out when this broke here this morning that this is actually a historic image here for you folks. We all remember, of course, the recessionary environment, and also too fascinating how it coincides nicely with these socialist presidents. Probably a lot of you weren't around for Jimmy Carter, but he was pretty damn left leaning. And of course, unfortunately, what that means is that they give in to the oligarch bank hierarchy. They're desperate for spending. They desperately want to borrow money. They desperately want to deficit spend, and spend their way out of economic bad times. But that's a potion for disaster. And unfortunately, I think we're going through the same scenario now, where you can't solve the problems of your life by going into more debt. And tragically, the only way a society learns this is by going into more debt. And then ultimately, the whole fucking thing just blows up. Excuse my French, but really, we're in really, really bad situation here now, folks. We're supposed to be a consumer-driven economy. That's the whole point of this. Of course, dear leader in my country, he's trying to change this for some reason and change our country into like a government led. But keep in mind, government doesn't do anything. Fascinating. As soon as I drop the F-bomb there, all of a sudden YouTube says, we're not receiving enough video to maintain smooth streaming. You're not allowed to swear on YouTube anymore. Stop that, naughty boy. And actually, that's an interesting point. People have been pointing out that my dear leader in my country wants to literally make it that if you have ever said anything that is hate speech, now how the hell do you define that? Hey, there's an open-ended term. That'll probably have to go right to the Supreme Court. And I would imagine that ultimately, 10, 20 years down the road, it does go to the Supreme Court and it gets thrown out because that's such a vague term. But how many people's lives are going to be destroyed between now and then? Oh, God. Anyway, it's tough times we're living in here, folks. This is not, as a lot of people have pointed out. Can't remember how the expression goes. Tough times make for tough people, easy times make for easy people, or whatever. I've probably butchered that quote, but anyway, the point is, this is as tough gets when it comes to these damn economic cycles and decades and stuff. So if anything, just try and get through this decade. There will be better times ahead, folks. There really will be. And all we can really do is we just got to survive. So anyway, point of the matter here is, as direct anecdotal evidence of some serious problems in our consumer-based society, consumer-based economies. The consumer is not happy here one bit. And ironically enough, this was, we all remember that through this event, the guy that was in power, he got run out of Washington on a rail. And, looking back, it was kind of considered a laughing stock. And oh boy, I get the feeling orange toupees are going to come back in steamroll into power here next fall, because this is an ugly picture and it's very difficult to fix this kind of problem in the short term. And of course, if you are like an Elliott wave kind of person, then really we all know it goes like 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I don't know whether 3 is accurate there or not, but 1, 2, 3, 4, 5. Oh God, there's probably going to be a lower low on this going forward. This is just getting started. And the problem too also is, the numbers that came out today The one thing that the U.S. Federal Reserve Board, and I think the whole damn thing's a joke right now, but anyway, you know Brian's opinion about the banksters. But one thing that the U.S. Federal Reserve Board is really concerned about is this the inflation expectations. Actually, interesting how that's not even listed here. Maybe it has to be like a one dot. And inflation expectations actually ticked up. So what that means again is it's very difficult for the Fed to even think about lowering interest rates. So if they do lower interest rates, inflation is just going to take off like a rocket here. So you can see that all of these numbers came in much worse than hoped for, expected, and we're at like historically low levels. And if this is a consumer-based economy, it means that our economy is in trouble here. Oh boy, party. I mean, the interesting thing is we have had the Fed say, well, we're going to be lowering interest rates 3 times before the end of the year. Well, how on earth do they make that kind of commentary when we had actually relatively strong economic data? Inflation expectations ticking up here. I don't know how that helps Mr. Powell's argument that there is no stag and there is no inflation. I would say we have stag. You can definitely see it in the consumer's attitude here, and consumers expecting higher prices. So that's actually the exact opposite of exactly what he said. Oh God, what a surprise! Anyway, also did an interesting tweet out here earlier today about the brutal corruptness of our society as well. And I don't know whether this is PMA or I get myself into trouble for saying stuff like this, but I think that a lot of the rally that we've seen of late, it's awfully hard to justify. Why on earth did the stock market just go straight up here? Remember, we had like almost no econs this past week. So why on earth is the stock market just day after day after day just grinding its way higher here? And then you look at the derivatives market and you go, oh, I see. The whole damn thing's a con job. So remember, these options expire today. These are the weekly options. And you can see, maybe you have to pull down this image. Maybe you can't see it on YouTube. But if you zoom in, you see that basically, and this when I did this about an hour or so ago, I think the stock market was a little bit higher. So we might even be a little bit lower. But look at all these. These are tens of thousands: 14,000, 24,000, 23,000, 26,000, 28,000, 16,000, 25,000, 13,000. Then you get to above where we are, where these options actually have some value and Wall Street's going to have to pay out. 300, 1,700, 1,200, 400, 4,000. Ooh, there's a big one. 3,000. I mean, it's almost laughable. And all of these options are going to expire worthless today. I mean, it's brutally corrupt how this is week in, week out, year in, year out. I mean, it's remarkable. The one thing I will say is, and I don't know whether you're aware or not, but I am teaching the level 3 program. And this is where we go into level 3. We do options in seriousness. And really, I might argue if you want like a full, well-rounded education program to learn how to be a trader, you're never going to find a program in 90 days that's going to teach you all this stuff. And our education program is actually spaced out over a full calendar year. And every single week is a brand new module. It might take you a couple of years after you've finished all of the modules just to fully absorb all the information and then be able to actually use it in a consistent plan. But the point here is this is a very specific topic that we teach in the level 3 program to our advanced students to try and see the blatant corruption of our society. It's way too hard to teach this kind of concept just, in one of these YouTube videos or something like that. But just take a screenshot of this and do it yourself on a weekly basis. And keep in mind, we have the big monthly options expiry coming up tomorrow, or excuse me, next Friday. Do you think there's going to be any shenanigans around that? So stay tuned for next Friday and we'll review the big monthly one. My hunch is it'll be an image that looks very similar to this. So anyway, be mindful for that next Friday. But what a fascinating anecdote. Why on earth did this stock market, with all of these gaps, why did this stock market turn up? Now, I would say it's a combination of two things. Number one, we went through a period of just relentless selling. So we actually got to the point, and this is where the dashboard is actually doing exactly what it's supposed to do. As you notice on the histogram, we got to a point about mid-April there where everything was completely washed out. And whenever you get the country funds and the S&P 500 itself registering these oversold conditions where both camps are actually in the oversold camp, which doesn't happen very often. But whenever you get these kind of conditions down in here, wow, you better pay attention, especially this country funds when both of them are like that. That's a huge sign that we're probably near some sort of pivot. Now, that doesn't necessarily mean it's going to be everlasting. And you can see that the market has lifted itself out of that insanely oversold condition into the options expiry. Thank you, Chris. And I might even argue now we actually are set up that they can roll this stock market back over and bring it back down. And you look at the actual stocks themselves. There is our ES chart. Interesting how we just missed a 2.618. I wouldn't be surprised. They're getting everybody all jazzed, bearish here. I wouldn't be surprised if through the coming week, there's probably some play against this 2.618. Don't have the confirmed divergences, but we definitely have a signal from Willie that we are stupidly overbought. So you can't really come in on the buy side here. I'd also say too, whose birthday's coming up here tomorrow. So get all your presents and your birthday wishes ready for Chris and Liz. And interesting how that doesn't even show on the screen here. So the gods don't even want me to have that on here. They're just going to ignore our birthdays this year. But I wouldn't be surprised if now actually they have to do some backfilling here and clean this up. I suppose, unfortunately for the crypto kids, this is we had a situation where the market lifted a bit. We got a bit of a hammer on the price charts. Well, I guess I can show you that on the weeklies here, although this does look very muddled. Is this enough for a reversal unto itself? Brian, I like to have W's on other sides of trend lines and all that kind of fun stuff. Is this a 3-bar fractal on the weekly basis? It could. What that means now is we have to get back up through this high. And that number, pretty important now, 65,513. And this is on the stamp chart. That probably is your signal that the bull is back. If we look at this on a bit of lower time frame, here is that daily chart. Remember, we were conjecturing whether this might be a bullish bot. And what we kind of said was, we need to see a W on the other side of this trend line to get us all bullish. I was a little disappointed in some of the community last night when I came back from Liam. The market had finished this candle, was ticking up here, and they were all like, that's it, the bottom's in. We're going straight up from here. And I'm like, come on, hey, show me a setup, show me a reason, show me some justification for thinking like that. At best, and yesterday, we had, not yesterday, but last night when this red candle that you see on the screen was brand new, we had sort of an upbeat market, but at best, to wait for a 3-bar fractal. Notice how this 3-bar fractal failed or confirmed. So we're back in the bear mode. For us to even start to get bullish, you got to see at least a 3-bar fractal to break this 3-bar bullish fractal to break this 3-bar bearish fractal. So, the point that I would just make here is now with this, oh boy, this is even worse. Because yesterday we had a low there, 60,634. So the question was, can we 3-bar bullish fractal stay above that low? And 6250. So we've made a lower low here this morning. There's no change to this scenario. And if anything, this is a really, really good lesson for everybody of why it's so important that you can't get bullish on that break of that trend line there. you have to see some sort of bullish structure, some sort of W that's got to come in. Actually, that's a terrible color. Let's change that to like yellow. So then that way, at least you can see it. So this, as I had said there a moment ago, this is actually a really good tutorial for all of you where sometimes, oh, it's still blue. Gee whiz. Sometimes we actually end up just walking our way down the trend line from the other side. Actually, it doesn't happen sometimes, it happens a hell of a lot. So the fact that we just broke this low this morning, you saw the stock market's not really overly happy. There is the cash market. We were kind of conjecturing, was this going to be an inverted head and shoulders? Like I said, I came back from Liam, and the market was pushing up here. And it's like, okay, give me a W and I can change my tone. But look at this. Lower, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. Huge rally. All right. Higher high. Can I now have a higher low? Nope. Sorry. And what's actually interesting about this is when you look at the futures markets, now this might be setting something up, but I think it's still a bit early. Last night when I came back from Liam, like I said, I was a little bothered by the insane amount of bullishness around TRI. And I had to just do a whole bunch of tweets and stuff and just sort of calm everybody down. I think in the after party, we'll go look at the Bitcoin options because I think there's a lot of really important information coming out of this Bitcoin ETF. These options expire today, and I think this is what's really driving things. And there's some bullishness there too. So don't think it's all just a bearish story. But what I think's happened here is that this was actually a megaphone. I spent, like I said, lower lows and lower highs, lower highs and lower highs. I'm a bear. Look at me around. And then all of a sudden, boom, higher lows and higher highs. Hey, this is good. This is a bull. Now, what I did find really interesting last night, I don't know. Actually, you know what? I'm going to save this for the after party because we pretty much run our course here for a half an hour. But what I will say, just to finish off this broadcast, is believe it or not, I actually think that this 60,350 area is actually not only a Foggenbaum, 61.8 fib off of this most recent range, but I do think that this actually starts to set up one of these ICT setup kind of guy sort of trades where, this is the top end of the range. I suppose you could do a fair value gap there. This is the bottom end of the range, that whole Fed event. I think you do a fair value gap there. So this was sort of your air pocket in between. And lo and behold, and of course, we broke the previous bearish structure here, and we did close above it. So if this is actually a bull, believe it or not, this isn't a terrible place for you to actually think about some sort of pivot coming in. So I, for one, and interesting, there's somebody's birthday. What a surprise. Happy birthday to you. We'll dump price into a buying zone. So, can we get nice W's on other sides of trend lines here coming out the other side at 61.8 or basically in the reload zone? That's what I'm going to be watching for. And I would also say too, and we'll do this in the after party, I think there's a lot of options information here that actually supports the bull case, but we'll talk about that in the after party. Finish off the conversation here. Might as well take a quick boo at the old Schult coins and the total crypto market cap. Same sort of logic as Bitcoin. We had a bullish 3-bar fractal that fires off of this candle right here. Nice inside bar. That produced a half decent little rally. Bearish 3-bar fractal at trendline resistance. Produced a bit of a pullback. Counter trend rally off the lows. And we actually did make a higher low here. So this was 2.182. And this low here, 2.183. Oh boy, so that is a lower low. Sorry. So maybe with this being a lower low, that we would need this day's candle today to be inside this candle, and then that might set up that 3-bar bullish fractal. No, we broke to new lows. We've made a new low, a 2.173. So in essence, lower highs and lower lows. Nothing's really changed here. I would expect a serious test, candle lows, the tails like to be eaten. You've probably heard me talk about that before. Candle body lows for trade location. So, a dip down into these lows might do something for us. Interesting how I'm just adjusting the bot setup 33.66. So we are still technically in bot land. Of course, it is not good sign that we've got this big fat double top pattern staring us in the face. So if anything, we really wanted to see a 50% retracement of this range. That's pretty typical of corrections. So that's actually a good sign. It's interesting too. We'll look at the BITO in the after hours. It has also done this as well. I don't know whether BITO is more sort of a broader crypto basket than just Bitcoin. So, I'd love to be able to sit here and go, everything's a bull. Let's get out there and buy. But I just don't see it. I'm sorry. You know, if and the interesting thing is I'll leave off the video with this. You can see the bot. It's fascinating how the market itself is actually working with these levels. So, at the very least, now that we've made a new low, we're going to have to see some sort of pivot to make a higher low. And then, of course, another higher low to give us those 3 higher lows. And then we can start thinking about actual bullishness here. As long as we are painting lower highs and lower lows, there's nothing really to get excited about momentum wise. What I would simply say, and the tweet that I put out yesterday, is this is actually a really important, how do we say this? It's important for you to distinguish what type of market participant you are. Because if you are a slick day trader, that's one type of market state, right? That's this kind of flipping the old futures contracts and stuff. And woo-wee, I sure left a lot of money on the table in crude today. As I had said earlier, was really working on being the demonstrator of best practices, getting back into the groove. I only had one micro contract on, but I have been booking a couple losses recently, and you can see how close I came to getting stopped out this morning. So psychologically, I was very happy. I only have one contract on, so I was happy with booking the 2-to-1. Get back on that profit train. Had I had multiple contracts, oh boy. And interesting, look where we just banged into. Surprising how that keep popping up, eh? So point here is if you're this type of trader, okay. And that means that you're probably in, hunting these kind of lower time frame. Actually, this is daily chart. Let's head on over to, futures contract land, maybe hunting megaphones, hunting setups off of megaphones, that kind of stuff. I would say that probably most of this audience is probably not that type of trader. We do have people at TRI that do swing trade and stuff, and they're doing very well. Juan over there, very apt at his craft. I think he's doing very well in the market these days. What I would say most of the audience is, especially like watching off of YouTube videos and stuff, probably you're more this type of person, like little old ladies. And little old ladies should actually be actively nibbling away, especially a lot of these names that have come back down into reload zones. There was one name in particular that I just wanted to leave off this free broadcast with. I don't necessarily think it's like a buy today. But I do think that the community really likes the story. We have a longtime site member who's a fan of this story, this FXS. And this, I think, is a good example where you can see they've basically brought the market right back down to the bottom end of its range. And lo and behold, we got a really big tail. Wicks and tails like to be eaten. And look at the cute little W that's trying to come in here. Is this a pound the table, got to load up? And, of course, I'm never going to say that to you. But if you like to come in and just nibble your way down at bottom ends of ranges because you're a little old lady and you're going to sell halves on doubles when these things rally off the lows, maybe it's a seasonal play. We rally into the summer. I'm totally down with that. I think that's a great looking idea. And FYI, I encouraged our senior portfolio manager in the crypto space because he does like the fundamental story here. I encouraged him to go do a little bit of nibbling here, and he did. So I thought that was cool. We'll hear about that on Tuesday. I might even for my little old lady portfolio, because I did sell halves on doubles when this thing popped up here. I might go and do a little bit of nibbling there, buy a little bit of that back. So, but this is a great analogy of when stuff goes on sale, nobody wants to buy. And I might argue that little old ladies, actually, it's your time to start stepping up and getting serious and maybe put yourself on like a once every week or once every 2 weeks. I've picked my, say, half dozen names that I like, and I'm just going to go start nibbling away as long as they're down at the bottom end of their trading ranges and they're starting to try and W out. I actually don't really have a problem with that. So just try and put everything into context. But remember, as always, Brian's usually right, but Brian's usually early. And I think this, we are in an environment now where I think pullbacks are buying opportunities. And if we look at like the total market cap, could this thing still work its way a bit lower? I don't see any reason why it can't. But at the same time, too, if your names are right down in reload zones and at the bottom end ranges, obviously don't chase high flyers. I really don't have a problem with little old ladies nibbling away. Okay, I think we'll leave the public rant at that. That was about 5 minutes more than I really wanted, but I hope you got some value out of that. Slow and steady wins the race. And I think a lot of what's going on here in the market is derivatives related, but at the same time, too, we are definitely getting messages about the broader economy that we're in some pretty tough times here. So remember what your number one job as a trader is. That's really, I think, probably the most important thing for everybody to remember here. So go slowly. Don't take too big of risks. Try and play from a position of strength, and of course, try and follow your plan. All right. Have yourselves a great day. All the best. Bye for now.